Well, slumping mortgage siblings Freddie Mac and Fannie Mae may be getting a bit of a pick-me-up, and so could the troubled housing market. The government lifted the cap on the amount of mortgages the companies can hold in their trillion-dollar-plus portfolios yesterday. Regulators believe that could help stabilize the housing market. Here to talk about whether government regulators are correct, Bob Moulton. He is the president of Americana Mortgage Group, and stocks editor Liz McDonald. And I know, Liz, you've been following this quite closely. And the big issue here is that both Freddie and Fannie had accounting problems. Yeah. They weren't filing their reports on time. They now have done this,
right.
and that has now allowed regulators to move forward with this change. What does it mean?
You know, yesterday, covering the Ben Bernanke testimony, when the OFEO, the government regulator, news came out that they're going to allow these two sort of quasi-government agencies to finance even more mortgages, the stock market was down before Ben Bernanke testified. But when that news came out, the stock market moved into positive territory, up about 50 points at one point. You know, so what the story here is that the government is basically saying, look, you two mortgage finance companies can take on even more subprime and mortgage paper to help break up the ice in the frozen credit market. The credit market's liking that. They'll take any good news of that sort, as they did yesterday.
Bob, will this help?
Peter, you know, it's no secret. It's been a rough going out there, you know, the last couple of years. And when you have restrictions in terms of the amount of loans that Fannie and Freddie can buy, they're going to get more restrictive in terms of the types of loans that they want to buy. They're going to scrutinize credit reports. They're going to scrutinize loan to values, lifting that cap, going back to where it was in '06, making the playing field the same as where it was before we had the accounting problems, making Fannie Mae accountable for their quarterly filings will only help the situation right now.
Yeah, at the same time, the government regulators said to both of these companies, look, you have to be sure that you have adequate capital reserves. And remember, two sovereign wealth funds in Russia, you know, both combined invested about $157 billion in both Freddie Mac and Fannie Mae. That was an interesting development. But again, the companies have, I think, about $2.5 trillion in book of business combined. By some estimates, it's $1.5 trillion. Very razor-thin capital reserves of $40 billion. In other words, reserves to support that book of business. That's still a danger zone for two companies that had $11 billion total in accounting errors over the last 10 years. Are their houses in order? That's the question of the day.
Bob, talk about the practical effect of this, because Fannie and Freddie play critical roles in the mortgage market, and they help to make mortgages more affordable for people. So if they can buy more mortgages, what does that mean for people applying for mortgages?
Well, if they can buy more mortgages, hopefully more people can get more mortgages. It all depends on where their guidelines are going to be.
And lower interest rates is the idea, because there's an implied government guarantee here.
Yeah, but the strange thing, and the phenomenon that happened is, you know, during MLK week, the Fed lowered rates 3/4 of a basis point. So short-term rates went down, the Fed funds rate went down. But since the short-term rates went down, mortgage rates went up from 5.5% to 6.25%. So when you have a pipeline filled with borrowers that are looking to maybe play the market a little further because they see that short-term rates are going down and short-term rates go up, it sort of is an oxymoron, and people don't really appreciate it. However, yesterday with the news, I saw Treasuries rally a little bit, so hopefully the longer-term rates will settle down. Things will get back on track to where it was a couple years ago.
Yeah, but that's a great point. The most important issue is the long-term rate, and that's what mortgage borrowers borrow at. That's been the conundrum. No matter how much the Fed Ben Bernanke chair has been doing, you know, it's the long-term rate has been hanging in. They like to see it maybe a little bit lower to help out borrowers. So, you know, anything that can be done to do that's seen as an effective stimulus for the economy.
All right, Liz and Bob, thanks for your insights this morning. And yesterday, Fannie reported a $3.5 billion loss, or $3.80 a share, for the quarter just ended December 31st. Today, Freddie just announcing its earnings. Have they been announced this morning already?
They're going to announce losses.
They're going to be reporting a little bit later. And the analysts expect losses of $2.34 a share for the company.